Hi and welcome to the monthly currency report from the team here at Audere Solutions. I'm Jeremy Thompson-Cook. April's been a fairly quiet month, to be honest. Q1 ended with talk about Silicon Valley Bank and Credit Suisse and issues around tightening monetary conditions. And while that has still played a part in markets over the course of the month of April, focus has once again fallen back on central banks and what they do to combat inflation. Inflation here in the UK is still above 10%. It's around 8% in the Eurozone and 6% in the United States. As we head into a new month with Federal Reserve meeting, Bank of England meeting, ECB meeting, are we likely to see more hikes from those central banks? We think yes, 25 basis points probably from each single one. But whether that marks the zenith, whether that marks the peak of interest rates for those three major developed economies remains to be seen. In the US and probably in the UK, we think it could do. The ECB, however, the higher it puts things, the more likely we are likely to see things that break, to be honest. Now, while that could mean slight gains for the euro versus the US dollar, a real basing above that 110 level and people pushing towards 115 over the course of the second half of the year, the issue around monetary conditions and financing for banks may be something that comes back to bite the euro, as said, through that second half of the year. The wider outlook for the second half of the year is dollar weakness, and that could come from a number of factors. Mainly, an increase in expectation that the worst of this slight recession, inflationary spiral that the world economy has got into is coming to an end, and therefore the US dollar can move lower as the Federal Reserve positions itself to cut interest rates by the end of the year. I don't think that's going to happen anytime soon, however. The comments out of the Federal Reserve are still pretty hawkish. And while inflation is above 6% and the jobless numbers are still looking very, very strong, wages are increasing, there's certainly no immediate incentive for the Federal Reserve to start cutting rates. Here in the UK, growth is still looking a little bit anemic and obviously inflation above 10%. We heard from the Bank of England's chief economist say that Brits have to just get to the used to the fact that they are now poorer. Whether that triggers a new round of people asking for pay increases, we'll have to wait and see. But if it does, don't expect the Bank of England to be pulling away from interest rate hikes anytime soon. So April, a little bit quiet. May is also typically a quieter month in currency markets. Sell in May and go away is always the phrase that is heard around this time of the year. But to be honest, with everything that the central banks could be up to, volatility is likely as we head through the summer. Thanks very much.